We all know those videos where people try to trade pennies to a house, and while most of us know that these are either fake or don't work, there is one man who proved it is possible, and he did it on a much larger scale. To be precise, he started with selling Coca-Cola door to door and ended up being one of the richest and most powerful humans among us. We are not talking about Elon Musk. We talk about this man from the little town of Omaha, Nebraska, called Warren Buffett. So how did he do it? How did a boy from the middle of America with no special connections or inherited fortune become the undisputed king of capitalism? It wasn't through luck, and it wasn't through risky bets. It was through a system, a philosophy, and it started when he was just a kid. Long before he was the Oracle of Omaha, Warren was a boy obsessed with two things: numbers and making money. At just 6 years old, he bought 6 packs of Coca-Cola from his grandfather's store for 25 cents and sold each bottle for a nickel, pocketing a 5-cent profit. He delivered newspapers, sold chewing gum, and collected lost golf balls to resell them. But the first real glimpse into his future genius came when he was a teenager. Instead of spending his earnings, he and a friend bought a used pinball machine for $25 and placed it in a local barbershop. When the money started rolling in, they didn't spend it. They bought another machine, and another, and another. Within months, they had a small pinball empire in barbershops all over Omaha. He wasn't just working for money, he was making his money work for him. This was the seed of everything to come, understanding that an asset is something that puts money in your pocket. But hustle alone doesn't make you a billionaire. You need a system. And Warren found his in a book that would change his life forever, The Intelligent Investor by Benjamin Graham. Graham, a professor at Columbia University, was the father of a radical idea called value investing. The idea was simple but profound. Don't treat stocks like lottery tickets. Treat them as what they are, a piece of a real business. Don't get caught up in the market's mood swings. Instead, do your homework, calculate what a business is actually worth, its intrinsic value, and then wait until the market, in a moment of panic or pessimism, offers it to you for a fraction of that price. Graham called this the margin of safety. For Buffett, this was an epiphany. He immediately applied to Columbia Business School just to study under Graham. After graduating, he even worked for Graham's firm, soaking up every lesson he could. He learned to be a business analyst first and a market speculator never. In 1956, armed with Graham's principles, Buffett returned to Omaha and started his own investment partnership with a handful of money from friends and family. His strategy was what he later called cigar butt investing. He looked for businesses that the market had thrown away, companies that were beaten down and unloved, but still had one last puff of value left in them. He bought them for less than they were worth, sold them when their price recovered, and delivered incredible returns to his partners, year after year. This led him to a struggling textile mill in New England called Berkshire Hathaway. It was a classic cigar butt, a failing business in a dying industry. He started buying up its stock, cheap. His initial plan was to squeeze the last bit of profit out of it and close it down. But then, something changed. This is where the story goes from great to legendary, and it's thanks to one man, Charlie Munger. Munger, Buffett's longtime friend and future business partner, convinced him to evolve his thinking. Munger's philosophy was different. He said, "It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. Why keep digging through trash for cigar butts that only give you one puff when you can own a fantastic business that will shower you with profits for decades?" This was the turning point. Buffett stopped liquidating Berkshire Hathaway and instead started using it as a vehicle to buy wonderful companies. He stopped being just a stock picker and became an owner of great businesses. He bought See's Candies, a beloved chocolate company with a loyal customer base that allowed it to raise prices year after year. He bought a huge stake in American Express when the market panicked over a scandal. He bought the Washington Post. And, in one of his most famous moves, he invested over $1 billion in Coca-Cola, the very product he sold door to door as a child, because he understood its incredible brand power, what he calls an economic moat. A moat is a durable competitive advantage that protects a business from competitors, just like a real moat protects a castle. It could be a powerful brand, a patent, or a low-cost advantage. This became his new focus, finding businesses with wide, unbreachable moats and owning them forever. Through Berkshire Hathaway, Buffett built the ultimate empire of value. He didn't produce anything himself. He became the ultimate capital allocator, taking the massive cash flows from his businesses like insurance companies and reinvesting them into other great businesses. All while the world around him was frantically trading, chasing trends, and panicking over daily headlines. Buffett's strategy was patience. While others were gambling, he was investing. While others were timing the market, he was buying businesses for the long haul. He famously said, "Our favorite holding period is forever." This simple, patient philosophy, combined with the incredible power of compound interest, turned his small partnership into Berkshire Hathaway, a conglomerate worth over $500 billion. It made him a legend, the Oracle of Omaha, whose annual shareholder meetings became known as Woodstock for capitalists, drawing tens of thousands of people just to hear him speak. He did it all while living in the same house he bought in 1958, driving a modest car, and eating breakfast at McDonald's. Because for him, the thrill was never in the spending, it was in the winning. From selling Coke bottles for a 5-cent profit to owning a massive piece of the company. From a pinball machine in a barbershop to a global empire of wonderful businesses. Warren Buffett didn't just trade his way from a penny to a house, he compounded his way from a small town in Nebraska to becoming the greatest capitalist the world has ever seen. And the incredible thing is, his system isn't a secret he kept to himself. It's a philosophy based on logic, patience, and understanding true value, principles that anyone can learn. In fact, we've dedicated ourselves to making this knowledge accessible to everyone. If you want to start your own journey and learn to think like Buffett, we've built a complete 49-chapter masterclass called the Value Investing University. It breaks down everything from the ground up, and it's completely free. It's the perfect first step to building your own system. You can find the link right in the description. And to keep learning week after week, you can also subscribe to our free newsletter, The Value Investor. And by the way, if you're wondering why Warren Buffett is way more wealthier than Musk and even has more power, that's something for the next video, so make sure to subscribe.